Hi there, traders. This is Brad. Good luck with today's trading action. All right, we're sort of getting back into some trending markets, and it really revolves around the yen and the carry trade, right? This is starting to dominate. If you're looking at your charts, and let me just flip over to those, you might sort of think that the dollar is rallying. Well, it actually isn't, right? This isn't the dollar putting pressure on various things. China was the driving force for Aussie Kiwi. Dollar CAD going up on weaker oil. Right, so you got a few different things, but it's the carry trade, right? It's the unwind against the yen. If I just come across to the yen and show you the yen crosses, like dollar yen is going up against all the currencies. Now it's come up a long way, so it's got a long way to go, and this is based off right expectations that the Bank of Japan will be hiking rates at their next meeting. Right, this is pretty big. They haven't hiked rates, I can't remember ever them hiking rates. So and it's gone up to sort of like a 53%. I think even last week it was down around 13%, but the chance for a hike is really having the impact that the Bank of Japan want on the value of the yen. So you know what, a follow through here could be a good thing. So that's where we are. And you've got like the Canadian dollar not only getting hit, weaker oil, the CAD yen selling as well. It's like a bit of a double whammy. Would make CAD yen a really good trade to the downside, that's for sure, if you can find somewhere to get in. Now, it's just coming back to the market. So we are seeing downward pressure here. And this is against, the forecast for the Fed, who are cutting rates. What we are seeing at the moment is an unwind of long positions here, definitely on the Aussie Kiwi, and the Kiwis have the highest interest rate differential. But you know what? The market's caught up in this, and there's no sort of end in sight just at the moment, right? This carry trade, and if you look at the longer term charts, dollar yen on the long term charts, it's trying to break down through 155. If it does, we're going to see potentially another couple of 100 points. But we are, what are we, like 7 days out from the interest rate meeting? The market could have jumped the gun here. I think it's more of a situation where everyone was getting geared up for a weaker dollar, right? Higher euro, sterling, Aussie Kiwi, and a couple of things have come up that have blown this out. As I said, China is really driving Aussie and Kiwi lower, and the weaker oil is also driving the Canadian dollar lower, which pushes dollar CAD higher. So that's where we are, right? And you come into today's trading opportunity. This is the last week of the month, right? Notoriously sporadic and not a lot going on. But we do have a few things coming out today. Nothing like massive, right? The PMI numbers out of Europe. You know what? Well, the short-term trend is down. Weaker numbers here works with that. Same with sterling, right? We've got some a range of PMI numbers, manufacturing services data there. Once again, weaker numbers goes with the current short-term trend, and that could be good for us. The Bank of Canada rate decision, right? I don't see any change here on there's a change of rates factored in, but no change of the whole plan. I don't see this as being a major event at all. In saying that, right, if I just come back to the interest rate probabilities here, Bank of Canada, the cut, okay, 0.25% expected, 84.5%. Now that was up around 90, 92 last week, right? So it's just eased back a touch. There'll be, if they do cut, there will be a small move, right? Only 15% of say traders, this is the way to look at it. 15% don't think there will be a change. Well, they'll have to sell CAD and buy the other instruments, right? So there is a chance for a small move, but I can't see too many surprises here. The one that is the spanner in the works is this Bank of Japan hike, right? 53.4% and 0.1. It may not seem like much, but this is big, right? As I said, the Bank of Japan, as far as I can remember, 35 years, they haven't raised rates. So this is a bit of a game changer. They may be talking shop and trying to get the market to move for them. They are doing that, but I think we've got some other things to wrestle with at the moment. Last week of the month, no huge data coming out. So I tell you what, there's still room for these Aussie Kiwi, Euro, Sterling to go lower, right? And as I said, this isn't a dollar move. It's more the flush out of the carry trade. And that is Euro yen, CAD yen, Sterling yen, Kiwi yen, Aussie yen, Swiss yen. Sell them all, right? That's what's happening in the market just at the moment. It's like a bit of a green light here for the yen crosses. And if I just flick this over to the yen crosses on the daily charts, this will give you a scope of how far this could go. Right now, there's no structural change in Japan, but we are starting to see this thing start to move. These pairs correlate, right? They all correlate. Now, Kiwi has broken down. The Aussie's getting close to a trigger level, as is Euro yen. Sterling yen's got a bit more of a way to go, but the downside of Swiss yen looks good. And obviously with oil falling as well, CAD yen, no surprise, it's leading the way. So that's where direction's coming from. Just be aware of it. So if you are trading, make sure you're hitting the right side of the market. If anything, I would expect the majors or Euro, Sterling, Aussie, Kiwi to be trending lower whilst dollar yen corrects here at the moment. All right, guys, that's it for me. Sort of tricky markets. This last week of the month is always a little bit tricky. I don't see much coming out of the data, except, you know what, as I said, with the German, Eurozone, and UK data, weaker numbers works in with the current trend. There might be a few bucks in that if the data comes out weak. All right, guys, have a good one. All the best. Cheerio.